A very warm welcome to all investors present here today. With so many questions on everyone's mind, especially after the India-US trade developments and the recent budget announcement, it's natural to wonder where the markets are headed next. Our Chief Investment Officer, Mr. Sunil Damania, will walk you through the current market landscape and what investors can expect going forward. We'll also have a Q&A session at the end to address your queries. Before I hand it over to you, Mr. Sunil, just two important announcements to make. We're shifting both Model Portfolio and Portfolio Optimizer to Mojo Infinity. We only have last few hours left where you can use this link to extend your plan. This two features which you have will end at the end of your expiry, so you can go ahead and extend this for the long term. It's 1499 for 1 year, plus we're giving you 2 years free. With that, over to you, Mr. Sunil.
Thanks a lot, Jason, and a very warm welcome. Today, fortunately, the day is good. Normally, people have observed that whenever I come in front of you, the market is down. Fortunately, today the market is up and is almost 3% up. Why it is up? We all know because yesterday Trump announced. I'm going to cover that in my presentation, in a later part of my presentation. I will going to give my take also. What is the implication of this on the market? I must tell you, there are certain caveat here in what has been announced by Trump. We need to wait for more clarity, and what are the concerns that I have at this point of time. I'll also discuss that. I think market has gone a little overboard with this announcement. Who knows, tomorrow market could be a little different in terms of color. So I'll explain you why I'm saying so. So please remain tune in, listen to my comments on my take on India-US trade deal and what should we expect and how should you basically position your strategy based on that. But before I begin my presentation with our equity outlook, a disclaimer that investment securities market are subject to market risk. Please consult your financial advisor before buying, selling or any stocks. Past performance is no indicator of future performance. So if you look at, the Indian market had very similar kind of behavior we saw in 2025 January. If you remember, Jan was extremely bad for the Indian equity market purely because of Trump announcement of a tariff. Am I right? And something similar happened this time also because of Trump. The market went down. The Indian market, Nifty declined by 3.1%, mid cap by 3.39%, and small cap by 4.71% in just 1 month. So you can understand the quantum of fall which has happened in the market and kind of erosion that would have taken place in the investor's portfolio. Normally you don't see indices. Is the data font visible on a screen? I think we need to change it because I think it's not so much visible. Am I right? I think we need to change it. So this is a very quantum fall. 4.75 in a small cap index is a very, very big one. Am I right? This fall has happened with higher volume. On NSE, the cash average volume was 1.1 lakh crore, which has been the highest in the current financial year. What does this mean? That lower level people are making comeback to the equity market. Remember that. So in a way, I think somewhere people are finding valuations attractive, and that's the reason we are now at the new high of FY 2026 in terms of average cash volume. But the market sentiment was very breadth was very negative because small cap decline, mid cap decline, large cap decline, and that's really reflecting on the advance decline ratio, which was near about 0.8 for the month of January. FII continued to remain a net seller in the Indian equity market. This was almost 36,000 crore in single month of January. I think and yesterday I remember, not yesterday but day before yesterday, it's on Sunday, one market expert saying that budget has been so bad, let's wait for the Monday and there'll be more bloodbath in the market and FPI will come very heavily because today on Sunday they did not participate. And sometimes I always wonder how fun or how seriously you should take this kind of a comment from someone. Why? Because there was no bloodbath tomorrow. That was yesterday, that is on Monday. Indian equity market. On the contrary, Sensex and Nifty close in the green. And today, whatever the loss that we saw because of budget, we are in positive. So, equity market is all about controlling emotions. And emotions can be controlled only when you have a conviction. And once you are convinced of what you are doing, the patience comes automatically. And more often you listen less to the so-called experts, you would do better for your portfolio. One gentleman yesterday came to our office from Delhi and he was narrating a story about how we get out of one metal stocks, listening to one market expert on one of the Hindi business channel. And he said, "Mera itna nuksan ho gaya," and the script basically moved up by 6x from there. So sometimes you need to understand, you need to apply your own logic and this one, don't get carried away by emotions. I think what happened in the budget day, a lot of people got carried away by the emotions, and that's where I say market should not be, your investment decision should not be decided by your emotions. It should be decided by the logic, by the fundamentals, and as long as you control your emotion, you should be better off. Let's move to what happened in the month of January. Let's first talk about Indian economy and then we'll move to the global events. Government wanted to, and rightly so, wanted to safeguard our domestic steel industry, and they've extended 3 years tariff on the steel. That does not include stainless steel, particularly from cheap imports coming from China. And if you look at the metal as a pack, has done extremely well, and within that ferrous metal did very well. Inflation moved up in the month of the data came for December. In the month of January, it increased to 1.3 as compared to 0.71. I must tell you again, inflation from here on is going to go up. The second half of FY 2027 will see higher inflation coming in. So I think the best part about the inflation is that जो inflation low level पे था, I think it's in a rear view mirror, and we will see these numbers gradually increasing, but we still below the comfort level of RBI. India signed a very significant free trade agreement with the European Union, and that's been a very, very big announcement done by the Modi government. Of course, many people are wondering when this will go on live. Right now, we don't have a handle on what exact date it will go on live, but going by the past precedent where India signed a FTA with other countries or EU signed FTA with other countries, most probably scenario should be last quarter of FY2 or calendar year 2026 or the second half of 2027. उसके पहले कुछ नहीं होने वाला है. So that's what it looks like as far as the EU deal is concerned. So hence, benefit of that has still not come in. But I think one big benefit that has come is that US came on board with its trade deal. IIP surged to 26 months high, 7.8% in the month of December, driven strongly by manufacturing and electricity output. Our sense is that we should see the IIP numbers improving going forward. Of course, we are going to see the SET also rebase somewhere by May 2026. I'll cover that in a later part of my this. But budget got announced, much awaited. If you remember, when I was in front of you in month of December, I said there is a high probability the STT will get either reduced or done away with. That has not happened. On the contrary, the STT has increased on the FNO products, and that really impacted market substantially on this. So that is what has happened. So budget has a little dampener on the overall sentiments. Let's switch from India to the US first. And this was the month for US only, I could say so, January. A lot of disruption, a lot of news and a lot of things which has happened which really spooked the market sentiment. It all started with Venezuela, where Maduro was captured by the US and brought to the US, and the legal action is happening there. People don't talk about it. People forgot about it. And what's happening to the Maduro, no one is interested also. But it did impact the market sentiment. वो कम था, the next week we had a Greenland issue, and Trump threatened to have a military use also for that, and that really created concerns because there could be in fact, the market started speculating that at one point of time they will not be in NATO only. Why? Because the European Union and the US could be at the lower heads, and that's the thing. Somehow situation came under control in the month of January only, and that was not this one. Somewhere the Trump announced that he will impose additional 10% tariff from 1st February 2026, and also said if Greenland issue doesn't get resolved, it will increase to 25% from 1st June. Fortunately, that has not happened, but it did impact the market sentiment very badly. Trump also announced that if for some reason they lose the control, Republic lose the control in Congress in November, Trump may get impeached. That's what the fear he said, and that's another this one. We don't know whether that will happen or not, but that's one very this one. Trump is such a gentleman. You never know what he can do next. The South Korea was one of the first countries to have an agreement, and suddenly he said, oh, South Korea is not doing enough, and hence he said, I will basically increase the tariff on South Korea from 15 to 25%. Because why? There is a delay in implementation of preliminary trade pact. Something happened with South Korea, something happened with EU, something happened with UK, can also happen with India. So don't take anything at the face value at this point. I do understand market has been a little buoyant, but somewhere need to also be a little practical about this gentleman whose mood swings by day and by night. He also threatened Canada with 100% tariff. Why? Because the Canadian president went to the China and he said, if you sign any deal with them, I'll put 100% tariff. And of course, we all know that at one point of time, market went down, Indian market went down. Why? Because Trump said that he will impose 500% duty on India because of India is importing crude oil. Human memories are short, but you remember this happened in the month of January. People must have forgot about that. So you can see the complete seesaw in terms of relationship with India and US in last 30 days. From one point of imposing 500% duty on India, he also threatened to add additional 25% import duty if you deal with Iran. And from there, now we are talking about 18% duty on India. So, like Mr. Trump is kabhi haan, kabhi na kind of a scenario. So we should not get too much excited by anything. At the same time, Epstein file got revealed. There are many prominent businessmen, people whose pictures and videos came in forefront. Many politicians also those, and that created some amount of a uneasiness. We don't know how far this impact. So right now, market seems to have ignored, but this could become a discussion point, at least in the US political circle, and that could create some amount of a concern. Again, Trump loves to be in news, loves to create controversy, and basically criminal investigation against the Jerome Powell. Of course, Jerome Powell was very loud and clear. He said this is basically an attempt to undermine the independence of Fed independence. So I think that's a very strong position taken by Jerome Powell, and things are, I think somehow Trump wants to create a lot of uncertainty in the this one. Despite threat and everything, Powell did not do any rate cuts in the Jan FOMC meeting. We don't expect that to happen before Powell give up his chairmanship of Fed in 15th May 2026. There will be two more FOMC meetings, and we don't expect any rate cut coming in from the FOMC in the next two rate meeting also. Inflation in the US remained very steady at 2.7, which basically gives some relief to the market. Why? Because there is no major impact of tariff, which basically pushed up the inflation. And at the same time, Donald Trump announced Kevin was as a next Fed chairman, and that did create some amount of uncertainty in the metal stocks. We saw that the price of gold and silver crack once this new chair was announced. International development, China-Japan tension happened and China basically banned some exports which can be used as dual use by Japan. Iran saw a massive unrest because people started protesting and US said that we will come and defend those who are protesting and there will be a war-like situation which happened, which did created some amount of a panic. The crude oil price moved up and that's what happened. But the January was the month, 2000, people will remember, for the volatility in the silver and the gold prices. We have not seen this kind of a volatility in the silver prices ever. At one point of time, silver was up month to date by 67%. I again repeat, in 1 month it was up by 67%, and by the time it came almost the same level what it was there 1 month before, that is on 31st December 2025. So you can imagine the kind of volatility it has taken place. Let's look at what happened. The big data, third consecutive month, we have seen that the advance decline ratio continues to remain in a negative zone. If you look at it, the number 0.87, 0.91 and 0.8. So the advance decline ratio continues to remain below 1. That shows the sentiment in the market. India lost 17 lakh crore market cap purely because of heavy selling in mid, large and the small cap. 460 lakh crore market cap. In fact, this market cap is less than what it was there in September 2024, despite so many IPOs coming in. Cash volume increased to 1.1. That's a 12 months high of this one, which clearly shows that there is a buying interest coming in the market, and I think it's a very good sign for the Indian. So that means now equity market is in a discussion table purely because of what happened to the gold and silver, what happened to the bitcoins, and what's happening to the global market because of uncertainty relating to the AI. Metal and PSU company was leading from the front in terms of gain, but realty index again extended that loss. 2025, it was the worst performing index and it continued with 10.81. FMCG index is further down by 7.68, and these gains are, these losses are very substantial. Normally you don't see this kind of a decline in 1 month, but that's what has happened. Somewhere value buying will emerge. Who are the top gainers and losers? BEL continues to be on the top. So if you look at the out of top 10, top 4 companies are PSU. Bharat Electronics, ONGC, Coal India, SBI, and of course we have NTPC also. So that makes it 5 PSU companies are in the topmost. And company like ITC declined by 20, Geo Financial declined, Reliance declined by 11%, and so on and so forth. So there has been you can see that the consumption and some of the companies which basically, of course, ITC got impacted because of the cigarettes, the more excise being levied on that. FPI sold 36,000 crore, DI bought 69,000 crore. So again, while the DI positive, FII negative. Market sentiments, you can see what is happening every month. In last 2 months, both large cap, mid and small cap have closed in the red. And small cap particularly has lost in last 3 months substantially. In other words, small cap doesn't seem to be the favor with the investors. GST collection has been better despite some cut which has been announced or restless has been done. So if you look at the YoY, 1.83 lakh crore, 1.93 lakh crore. So somewhere I think the buoyancy is again making a comeback, which is a good sign for the GST collection. Rupee lost 2% purely because of concern about 500% tariff on US exports to the India exports to the US, the geopolitical tension and so on and so forth, which lost. Of course, India did, the rupee did recover today, but one of the worst month we can say in terms of decline post July 2025 as far as the rupee is concerned. Indian equity market continued to laggards as compared to China and the US. Who knows, by the time we talk about end of 2026, these numbers could reverse, this position could reverse. That's what can happen. Crude oil price did move up purely because of Venezuela impact, because of Iran impact. The 62 become 63.08, and as I speak to you, it has further gone up to 65.82. That's in the month of February. In last 2 months, the crude oil price has gone up almost 5%. Does it get sustained? Not sustained. Of course, the OPEC decided not to hike the what we call production because there was a lot of the price of crude went down. They did not increase the price of this one, the crude. They did not increase the production output. Normally, February is not a good month for the market, Indian equity market. If you look at it, in 2016 we lost 8%. In February 2018 we lost 5%. Of course, in 2019 also we lost 1%, but very marginal. 2020, that was of course before COVID, 6%. 2022 3%, and February 5.5%. So there are more reds than green in every Feb. This year could be a little different. When I presented the budget, I was not expecting the US trade agreement to get announced, but I believe that Feb 2026 could be a positive one for the Indian equity market. Now I want to spend some time on this because a lot of people have been asking about what to do with the gold and silver. The gold, you look at 4,400 kind of a stuff in 1st January, okay, and it basically moved to 5,400, and then it cracked to 4,600. Of course, it moved up today. 14% fall has happened in gold prices, but gold is little less reasonable. But silver, you look at it. In fact, it almost came to the same level what it was there at the beginning of January 2026, almost giving up almost 60-65% kind of a gain. The people are asking what needs to be done. I again repeat what we stated in January beginning of 2026. We do not expect gold and silver to give very similar kind of returns which it gave in 2025. We expect gold and silver to give either muted returns or negative returns. And hence, put gold and silver as more of a assets allocation strategy. I'm also doing something very similar. I also sold some portion of gold, I sold some portion of silver as a part of my assets allocation strategy. So 10 to 15% you should keep it. Anything beyond that you should. So now a lot of people are asking, is this fall in the price of gold and silver is a good buy or not? My answer to them is that please go ahead and buy in a staggered manner if your allocation is 10 or 50%, whatever you decide. But if it's more than that, do not increase. There is something called falling knife, am I right? The falling knife applies to the stocks also, and falling knife applies to the precious metal also. Do not go overboard and bola, "Ye sasta ho gaya, let me go and buy." Not necessarily that will get sustained. So be careful with buying gold and silver. Put it as a part of your assets allocation strategy. Indian numbers continues to remain very, very good. 11.4% growth Y on Y, and this is despite labor code impact coming in. If I have to, I don't know the numbers very this one readily with me. It would have been easily by 100 bips higher than what it was if I have to adjust for that. If I remove Reliance, it's 12.2. If I remove BFSI, it's 12.6. In other words, the numbers are very rock solid, and more companies have declared better numbers. It's not driven by the few companies. Why? Because 56% have reported quarter-on-quarter net profit growth, and 65% reported Y-on-Y quarter-on-quarter Y-on-Y growth in the net profit. That means more companies have basically reported better numbers, and because of that, Indian numbers looks very, very good. Now come the big day, which is the news, maybe for the day and maybe for the year. Finally, there is a progress between India and US trade deal. Let's look at the contours of the deal first and try to understand how feasible that looks like. Ye hoga kya? So let's look at this way. This is a Trump which announced that, this is the thing. Everyone would have read, so I'm not going to go this. What US is claiming, I want to harp on the word the US is claiming. The US is saying that India will stop buying immediately Russian crude oil. The Russian today announced that there is no information from the Indian government that they will stop buying Russian oil. Am I right? And what US is claiming that what Russia has been supplying, it would be supplied by US and Venezuela. Venezuela थोड़ा difficult लग रहा है. First thing, they need to ramp up. Second thing, the quality of crude, which is more heavy, we don't know whether Indian refiners can basically process that or not. That's one. And second thing, how much US can supply? It's also a big question mark. I'm not very sure. The US is claiming that India will do 500 billion of import without specifying whether we are talking about 1 year, 2 year, 3 year, 4 year, 5 years. And I'll show you some data. In calendar year 2025, how much India import from US? 500 billion looks too big number. And so we need to put things in perspective, and I'm going to give you that perspective also. One very, of course, and US is saying this is that if India does this, we'll reduce the tariff from 25% to 18%. Of course, the 25% tariff, which has been imposed because of we are importing from Russian oil, which will anyway go down, and that will make Indian market very, very competitive. If you look at, if this has to happen, okay, India would be more competitive as compared to Indonesia, Bangladesh, Vietnam in terms of import duty. And that makes India very, very competitive, bringing in line with someone like UK and the EU. So it's a very, very good thing. But there are a lot of grey areas, and hence I'm not too much excited. See, my job is to tell you very frankly what looks feasible, not look feasible, according to my understanding of this. A lot of people criticize me, and of course many people appreciate also my budget presentation, but some people think I'm a little biased and so on and so forth. In trade policy, you will think otherwise out. Why? So my job is to analyze without emotions, with facts and figures. So where are the issues which I believe we need clarity? The US is saying that 500 billion karenge, okay? There is no confirmation from the Indian government yet. कि हम लोग 500 बिलियन करेंगे कि 100 बिलियन करेंगे, कौन से टाइम फ्रेम में करेंगे, नो क्लैरिटी. Another statement is that India will import agriculture products from the US, which is very, very unlikely, I must tell you that, because it's a very political sensitive. I don't think India will ever agree either agriculture or dairy, because some of the dairy, that milk products, where the cow basically been fed with the non-veg products, and I don't think it's a very sensitive product item. I don't think India is going to agree on that. This is what US is claiming. India is not clarified, and that's where I want some clarity from the Indian government. And mind you, while the Trump said it comes from immediate effect, they have not announced any officially statement yet, till the time I'm coming in front of you. Okay? This is also unrealistic proposal. Okay? US will export to India at 0%. Why would India agree with that 0%? I don't think basically that's going to happen. So I don't think that's going to happen with 0%. That's why I want clarity from the Indian government. Russian oil 0. Where is that commitment coming in? I'm also not very sure India will agree to that, because we also need to find balance our relationship with Russia also. So by having good relation with US, I don't think India would prefer to have a bad relation with Russia, because US has been our partner in many crises. So I don't think government will basically say Russia ko chhod dete hai. Now there is another thing which is, so what is happening is that the US बहुत बड़ी बातें कर रहा है. Indian government has not given any official response to any of these points. And that gap is so huge, I doubt it will actually result into a policy actions. I doubt this will go to, and hence, जो आज market जो चला है ना ऊपर, because of trade deal, may not get sustained. Because market eventually, आज तो euphoria था, sentiment था, everyone is going blah blah blah, but reality will sink in. So market जो चला है almost 3%, both Sensex and Nifty, may not get sustained because of trade deal. Don't get confused my statement on the market outlook. I'm right now talking about the trade. Because of trade deal, can this sustain higher? Looks little doubtful. I will not be surprised tomorrow we see some reactions, negative reactions coming into the market. Okay? And of course you can ask me and so. Look at the deal now, 500 billion karna hai now. So this is a data which I have taken from the US census. 95.49 billion का अब तक हम लोग के इंडिया ने import किया है. In the calendar year 2020, the data is available updated only till November 2025. Am I right? 500 billion करने के लिए we are talking about 5 times. Looks little difficult. And let's put this in a context of how much India actually imports across all the countries across the world is 689 billion. Will India even want to increase imports from one single country even 100 billion से ऊपर? थोड़ा difficult लग रहा है मुझे. Am I right? So let's wait and watch for that data. So what should we expect going forward? Of course, trade deals have anyway announced what I believe will happen. RBI is going to come out with a monetary policy on 6/5. We don't expect any rate cut from the RBI purely because I think inflation numbers are going to move up going forward and hence there will be status quo the same way FOMC did that. Precious metal will remain volatile. My request to all of you has been be careful, otherwise you're on your wrong side and you can wipe out big money. So don't expect precious metal to remain upward or down. It's going to remain volatile. तो ऊपर जाएगा नीचे जाएगा. If you don't understand these assets, please stay away from these assets. If your allocation to the gold and silver is 10 or 15, whatever the comfort level you have, if it goes above that, please start to look in profits as and when it goes up. If you want to increase your exposure, if it is less than 10 or 15%, increase in a staggered manner. Don't be in a rush to get basically because सस्ता हुआ है तो ले लो ज़्यादा. Don't do that. One big thing is happening in the Indian equity market. There is a complete value reset. Indian market has become more and more reasonable in terms of valuations because as I said, September 2024 and January 2026 market cap of January 2006 is less than September 2024 market despite so many IPO coming in. The India's GDP for the FY 2027 as per the budget documents will assume a 10% nominal GDP growth. So even if you look at the market GDP, and of course the GDP number will get revised in this month. So that I'll just cover in the next slide. So that will make even the market valuation much more attractive. And I strongly believe FPI will make a very strong comeback purely because the valuations are good, growth in earnings are in double digits, and the developed market will see some amount of profit booking, which in turn will see that emerging markets getting better flow, and India should get a better flow from coming in. So, despite I'm little skeptical about the US-India deal, I think Indian market has entered a new bull zone. Of course, it will be driven more by the large cap as compared to the mid and small cap. So there are two data which will get released. February 12, we will see the CPI data with the new series coming in, where your subscription to Netflix will come into play. You are paying what you are paying to the likes of Uber and Ola will come into play. So they are basically bringing in more elements to truly reflect what the inflation in the you and me basically has to go through that. Second thing, on February 27th, India's GDP data will get revised with new series coming in. And historical trend suggests that normally when that happens, India's GDP numbers get revised little upward. So I would not be surprised if again this year data get revised and that looks market basically the number looks much better in terms of fiscal deficit and so on and so forth. So that can happen. I again repeat, market is building on a momentum. This is not the time to get out of the market, but get into the market. If you don't have money, do not borrow or do not bring your emergency funds. But if you have money, increase your allocation to the equity. I think India is making a very, very nice base in terms of the bull story. Why? Reforms have taken place in terms of income tax rationalization, GST rationalization, 125 bips rate cut coming in. The nominal GDP growth is likely to be 10% in this the coming financial year. Budget is looking more structural reform than the populist measure. These are all going to make Indian market very, very attractive. And hence, allocation to the equity should be increased. Higher volume also suggests that Indian equity market is again making a comeback on the discussion table. Why? Because the gold and silver was the name of the game for everyone. And because of this volatility, now people are start thinking, equity mein dale kya paisa? So that's another thing which has happened, and high volume just indicate कि कोई lower भाव में आके माल लेके जा रहा है. So that's a very good thing which has happened, and hence we are constructively positive on Indian equity market. Despite substantial fall that happened in the month of January, we are maintaining that Nifty 50 will give most probably 15 to 20% gain by December 2026. And hence my request to all of you, if you have money, increase allocation to equity. I have been doing personally on my personal portfolio, and I would request you to do the same. If you don't agree with me, please ask me the question answer in my this. And Jason, I would request you to please pick up more negative questions where people don't agree with my point of view.
Okay, I'll start off with this first question. This is by Anjali Seth. Could you speak more on the Indian economy rather than Donald Trump?
So, ma'am, Indian economy, we all know economy survey data has come. We have one of the fastest growing economy in the world, more resilient economy in the world despite tariff. We have done extremely good job. India, a lot of Indians exports. I talk about what Indian growth numbers are, Indian numbers for the December 2025. But today, ma'am, try to understand. Today, tariff is so, basically hijacking the complete discussion. Because of tariff, people are not willing to even look at the strong economic fundamentals of the economy also. And hence, I need to cover because today's sentiments are not driven by what's happening in India. The sentiments are being developed because of what Donald Trump is doing. It's not only for India, it's applicable to global. And hence, I need to cover, I cannot ignore this gentleman by any manner. If I ignore this gentleman, then you people say then you are not talking about what's actually happening in the ground realities. So yes, I know, but as long as Donald Trump is a US president, I will have to cover him whether we like it or not.
Okay, I'll move on to this next question. This appreciation note by Harshad. Your analysis is highly appreciated. I've been following you from COVID times, and very easily I've not come across a more better analyst. Data collection and interpretation is ideal. Could you please do a session on the latest Trump 18% after a month also to review the effects on this announcement? Also do something on the top 5 rare earths or the semiconductor sector.
So thanks a lot, Harshad ji, appreciating this. I must tell you, there's one gentleman who came down from Delhi yesterday. I don't know whether this gentleman is attending our webinar today or not. He has been a chartered accountant investing in the market since 1985-86. He came and said, sir, मैंने अपनी लाइफ में कोई पैसा नहीं, चार्टर्ड अकाउंटेंट था इक्विटी मार्केट से. I started making money only after attending your webinars. So that's another, almost couple of months back, we had one gentleman coming down to our office, one of our customers. He said, sir, I could buy, there is a place called Ghatkopar in our eastern side of Bombay. He said, I could buy 3 BHK flat only because of MarketsMojo recommendation. So that's a thing. So thanks a lot for appreciating, and of course we will definitely keep reviewing the US tariff issue. You talk about rare earth and semiconductor. Unfortunately, sir, there are not many companies at the listed space that I can actually talk about it. But I'll definitely try to dig more research, and I'll come in front of you. But definitely Trump 18% tariff will definitely be a topic that we'll be keep covering in our various webinars. Not only 1 month, as long as the tariff is an issue, we'll keep covering it in almost each and every webinar.
Okay, this next question by Balsundaram. Hi Sunil, thanks for the webinar, which was insightful. You mentioned that the results of India Inc. is encouraging, but at the same time you foresee inflation levels going up. I would like to know as to what you think are the drivers for inflation levels to go up?
There are few things which will drive up the inflation. One looks like that crude itself will go up because if you know that OPEC has decided not to hike production, and that could be one. Second thing, I think some of the food price will have a baseline impact because they've really been very, very low, and that could basically spur the inflation. So remember, sir, the Indian earnings are much better when the inflation is there. Because you got what I'm trying to say, because your profit adjusted for inflation looks much better. Am I right? So despite low inflation, if India has been able to report double-digit growth, it's very, very good. So look at historically, whenever there is an inflation, the not profit growth is much higher. Why? Because उनकी profit उस value में भी ज़्यादा हो जाती है ना. So that's what has happened. So I hope that answers your question, sir.
Okay, I'll take this next question by Prabhu. Best sectors to focus on after the EU and US deal with India?
So I think, sorry, I missed that point in my presentation. So I think if you go back to my equity outlook presentation 2026, I did mention the export-driven companies will do well. Am I right? And that webinar is available on YouTube. Please listen to that. I personally believe that export-driven companies will do extremely well. Why? Because one is the rupee tailwind coming in, depreciation. The announcement, of course, when I made presentation in first week of January, EU deal was not in place. The US announcement was not in place. But I think somewhere, the amount of resilience that Indian companies have shown, and I was optimistic that somewhere down the line, things will happen. So I think one of the best way to focus on those sectors which are export driven. It could be textile, it could be pharma, it could be IT, it could be leather companies. I think they should do reasonably well.
Okay, I'll move on to this next question by Rinku Narang. He has two questions. First one is the United States has imposed an 18% tariffs on goods imported from India, while goods imported from the US to India will be subject to a 0% tariff. Will this have a negative impact on certain sectors in India?
So I don't think India will ever accept 0% tariff on the US product. So that's why I covered in my Rinkuji in my presentation. I don't think government will agree to that. Maybe some products can come at 0%, but वो 500 billion का 0% में लेके आएगा, तो I think it's going to create a more major crisis. So I don't think that's why again I want Indian government to respond to that. Indian government has not yet given any clarification on that. Am I right? So I think this is all one side communication. The other side is neither acknowledge or denied this. And hence it's a gray area. And that's why I'm again saying the market has gone up today, not necessarily because of this news, it can sustain tomorrow. There is another question, second question. I received a sale call on profit booking model put from 31st January, which I executed on 2nd February. However, today I noticed that share that I sold is still showing in the model portfolio. Kindly resolve this with this. Rinkuji, point taken.
Yeah, the team is already working on this, and I think shortly he should receive an update that this has been fixed.
But I was informed that this has been taken care.
No, there are a few cases where some of the clients are still seeing it on their stocks.
So there was some issue, I must tell you that.
Yes.
It's not with you, Rinkuji. I think we had some problem on the front end with all model portfolios, and our team was trying to resolve on Sunday, which was a budget day. They tried to resolve yesterday, that is Sunday, Monday also, and I think still few issues are there which I think they will. So most probably by today evening this issue will get resolved. ये जरा वापस दे देना, मुझे WhatsApp कर लीजिए. Yeah.
Okay, this question by one of the investors. FIIs bought almost more than 5,000 crores today. Is this an indication that the beginning of FIIs come back strongly?
Sorry, I was not aware that they bought it 5,000 crores. So because I was in our compliance meeting with our the complete compliance and operation team, and I just came into this webinar room, so I was not. But it's a very good number if that has come. So I want to. You remember that one gentleman on the TV channel on budget day said that there will be a bloodbath and FII will sell very heavily. It's a good news, 5,000 crore coming in. I again repeat, Indian, and if it's there in my presentation also today. In fact, I was not aware that this 5,000 crore is coming. I again repeat, Indian equity market has become valuation become very, very reasonable. And if that is so, there is no reason why Indian FII should ignore Indian equity market. And with corporate earnings showing double digit despite so much headwinds we had to face because of US tariff, once the US tariff issue get resolved, I think we can see much better growth in India, and that is so. Why should FI should not come? I again repeat, I again stated that FPI in 2026 will be net positive despite 33,000 outflow that we saw in the month of January. So I'm very, very certain that that's going to happen.
Okay, I'll pick this next question by Anup Raut. He's put this question around 50 times. I'll pick it as soon as you put it once, so no need to put it many times. What's your outlook for small cap? I'm already invested in Infinity Ultra High Risk and Top Small Cap Opportunity. Is it the right time to put in more money?
So let's divide into strategy and the small cap as a universe. So you all know I have stated in my equity, we don't expect mid and small cap to index I'm talking about to give returns, very substantial positive returns. We still believe that large cap will do better in 2026 as it happened in 2025. Now coming to the Infinity Ultra High Risk and Top Small, it's a curated portfolio where our IP goes into system and try to see which companies. So while overall market may not do well, but probability high that our ultra high risk and top small cap option can do better. So is this the right time to put more money? I believe you are asking me for this two strategy. If that the question of yours is this, maybe yes. If you think I'm not too much, I've taken too much exposure in Infinity Ultra High and Top More Small, maybe you can afford top tier. If your question is that should I put more money in the equity as an asset class, answer is definitely yes. You don't have to worry about it. Okay. So there are, depending upon your risk appetite, if your risk appetite is high, please put in more money, ultra high risk and top. And see, never ever invest in any assets class because you have a view for 3 months, 6 months. You should always have a view for next 3 years and then you should take the strategy. Am I right? When I started increasing my allocation to gold and silver, my view was not for 1 year. If you remember the first time I said buy silver was in September 2022. When Mohit and I both were in a power series and I said please buy silver. And so my view was not for 1 year. That story played out much better by 2025. So that's the way you should look at it. So, and if you expand the time horizon for 3 years, very obvious the ultra high risk and small cap should do better as compared to the large cap. But if you ask me for 2026, it looks a little difficult that mid and small cap can outperform the large cap.
Okay, I'll pick this next question by Naresh. Hi Sunil, Model Portfolio Optimizer is still part of MojoOne for the existing customers?
I think this
if you don't mind, go ahead, pick this up. Yes, both these plans are still available on the links. Also, these features are included in your existing plan. You can also continue using them on Mojo Infinity once the migration is done. I'll pick this next question. This is by Sarang. Hello Sunil sir, this may be out of context question, but still want your opinion. If one wants to park their excess money into safe asset classes for annualized 8 to 9% returns post-tax, is this a fund which can be used as a cash bucket to deploy into equity whenever valuation seems reasonable? Please suggest the best option for such asset class and sample risk categories or names if you're suggesting bonds.
So, sir, even I would like to know which is a safe asset class which can give me post-tax returns of 8 to 9% return. Even I would love to invest. If it is because we are using safe and at the same time 8 to 9% post-tax. Person like me would have a 35% tax bracket. तो मतलब उसको 14-15% का 14-15% ही हुआ ना return, which is assets, safe assets. Then I don't need to even invest in equity because safe है ना वो तो 14-15%. तो सर ऐसा कोई है नहीं जो which I am aware about, Sarang sir. But having said that, I think your question is that is the equity market valuation should be reasonable. You want to put that money. Sir, equity market valuations are reasonable right now. I've stated in my presentation also. And hence, if you are waiting for market to become reasonable, it's anyway reasonable. I think Indian equity market again move in a bull zone look like. And hence, please use every dip in the market to increase allocation to equity. That's what my. But sir, आपके कुछ पता चले 8 to 9% with post-tax वाला safe, I would love to also know. I don't know any this one which will give me 8 to 9% post tax and which is still a safe assets. Looks a little difficult.
Okay, this next question by SS Namdari. Any insights on reasons behind the silver crash? It was more silver in ETFs compared to physical silver.
Sir, the history, Namdari sir, has many instances that something that moves up, and I have stated in with our PMS customer on Thursday, those who are PMS customer would know, and I stated it very clearly, stay away from, because I've given that gold silver ratio in October 2025, 16th October 2025, very precise. I suggested if you wish to buy between gold and silver, please buy silver, because the gold silver ratio was 80. And our PMS customer would know that because that's a webinar and they can watch also if they want to. On last Thursday, I said the gold silver ratio has come down to less than 50. And hence, it does not make sense to invest in the silver. If at all you want to do that, if you want to increase allocation now, your gold and silver increase the allocation to gold as compared to silver. So the silver has gone up too fast, too quick. And any assets class which gone up too quick and too fast, it's something called melt up, which has to equally fall also. And hence that's this. There's a lot of speculative elements, which is creating this problem. And as and when the speculative element overtakes the fundamental factors, it does create a problem. So I repeat, Namdari sir, my personal view for 2026 that gold and silver will give muted or negative returns in next 12 months. And hence, don't get too much excited. It has fallen now. Let me go and buy. I don't think you are going to make great money on that.
Okay. This next question by Jacob. What's the view on PSU banks and metals given increased borrowing, government borrowing next financial year and the steep correction in metals following the new Fed chair announcement?
So PSU banks, I think there is the government has gone on the record, seems to be, not gone on the record, sorry, I stand corrected. There are news that government may allow FDI up to 49% in banks, and that could be open up avenues for the PSU. Number two, there are news that the corporate house may be allowed to run a bank, which is right now not allowed. So that could another be what we call kicker for the PSU banks. So most probably PSU banks should do well. Only thing, my request to all of you, look at the price to book value with a ROA, return on assets, and take a call on that. But overall PSU banks looks little constructively positive. Having said that, in our PMS we do have near about 8 to 9% exposure into PSU banks in our PMS. Metal is also, so metal is a function of what happens to the global economy, am I right? And some of the metals have gone too quick, too fast, the way gold and silver is. And I believe when you refer to metal, you are referring to industrial metal like copper, silver, and so on and so forth. I think it would not be a bad idea if you can lock in some profits with that metal. Having said that, what I am referring to is a non-ferrous metal. As far as ferrous metals are concerned, I don't think we should basically be little too quick to lock in profits. Why? Because in my presentation I did talk about that extended tariff protection by the Indian government on the steel, and hence the steel may do better, but non-ferrous metal maybe it will not be a bad idea to lock in the profits. If you don't want to do 100% profit, Jacob sir, maybe you can lock in 50% profit.
Okay, moving to this next question by Rahul Kumar. He says that Mojo IP changes basis sector score is not a good idea. Mojo was known for its bottom-up approach, and hence, could you give an option to choose between two IPs?
I don't think it has gone, Rahul Kumarji, whatever sector score based on this one. I don't think sector IP has gone on live. Am I right?
No.
It's not gone live, sir, Rahul Kumarji. And we will do a lot of permutations, combination, and then it will be done. So as and when we do, then at that point we may explore. Right now, our IP is purely based on bottom up only. There is no sector element which has come in yet in our score system. As and when we do that, at that time we can explore. But right now, to hai nahi, to it's a hypothetical question. Of course, Mohit is working on that, but I don't think it has been made live to the best of my knowledge. That's what even Jason is confirming to me. So in our PMS, we are not using even sector IP right now.
Okay, this question by Mayu. Good evening, Sunilji. What's your view on tax harvesting due to financial year end? Is there any data or pattern you have observed during such periods?
Mayurji, I don't do tax harvesting because sometimes if you do that and you want to, like, for example, you did tax harvesting yesterday. आज तो market ऊपर चला गया तो it's very difficult. You can do tax harvesting especially when markets are a little low and you don't expect market to have too much volatility. So then it helps you to buy and maybe after 1 month or 40 days buy the same company again and you book loss and save some taxes. But when markets are volatile, tax harvesting sometimes turn out to be counterproductive. I don't do in my personal portfolio. I wouldn't recommend also you to do it. But then it's individual choice. कोई negative सवाल नहीं है क्या, Jason?
No, sir. I think mostly we have positive questions. There are just one I think which I have picked up.
Okay.
Yeah, I'll just pick up this one particular suggestion by Rohan Sharma. He says that NSE has launched a new index, NSE Small Cap 500. When can it be added to Mojo's screener? Also, we have Nifty Microcap 250 index.
Oh, that's a good suggestion. We'll definitely do it. Jason, just forward me. We'll definitely edit. So that's a good suggestion. So what has happened? BSE mid cap and BSE small cap has been done away with actually. So this small cap 500 is a very good addition. We will definitely edit, sir.
Okay, this question by Sagar. Hello, sir. With today's news for trade deal, do we need to rebalance our portfolio? And since this trade deal and Europe trade deal will take time, maybe 6 months to reflect in companies' profit and revenue, and immediately there is no effect, do we rebalance now or wait for quarterly results and commentary? And which sector should we increase in our portfolio? Also, your view on small, mid, and large cap going forward after the trade deal.
So Sagar ji, definitely this trade balance is a game changer if it gets implemented the way it has been stated. I think there are a lot of grey areas and government is not going to allow 0% import duty in all US products. Agri is a strictly no according to me and hence it's not going to happen. I don't know whether we'll agree not to import from Russia crude oil. So there are a lot of grey areas. One side has said, second side is neither acknowledged nor denied. We need to wait and watch. But assume that this trade balance, basically a trade deal has happened. What should you do? Should you rebalance? Yes, you should do immediately. Why am I saying so? Because numbers to baad mein aayenge. But market will start discounting in advance. And one of the biggest beneficiary is export driven. Those people, those companies whose revenue comes more from the US, I think they will see the biggest benefit. And hence, market will not wait for the numbers to come out. They will start discounting immediately. So that's what you should be doing it. So don't wait for the result and commentary to come out. And view on small, mid and large cap, I continue to believe that large cap will do better in 2026 as compared to mid and small cap. So hence, if at all you have to do allocation more, if your time horizon is only 1 year, I would prefer to be more large cap as compared to mid and small cap.
Okay, so Sunil, that's it with the Q&A session.
So
today.
we don't have questions or because of paucity of time we are doing it?
Oh, because of time, sir.
So can we take last 3 questions because I don't come very often nowadays in front of our customers. So
Sure, I'll move on to this next particular question.
3 question last le lete hain.
Sure. This is by Mr. Manjunath. Late 2025 was a period of upswing in metals, especially the precious metals and also copper. Will the bull run of copper continue in 2026 as the demand-supply position in global market appears to give such an indication?
Looks little difficult, and I did promise you people that I'll come on copper. So I maintain to-do list, and I have kept copper as one of the items where I will exclusively cover on what's my view on copper also. But I've always observed when there is too much hype about one particular commodity, normally that happens at the peak of the cycle, not at the bottom of the cycle. And the way, I'm in some of the social media group, and people are now selling copper as an investment theme, which looks little, so that looks more like a peak than the bottom. So I wouldn't be very comfortable buying into copper, So I don't think there's a bull run kind of a scenario in copper. But what I'll do a more detailed analysis based on what are the demand levers for copper, what are the supply levers for coppers and how do we see the copper in year 2026. Of course, it's my promise to you. We will do it in February, in this month only. But you need to give me some time because my days are nowadays more busier than what it used to be in the past.
Okay, this question by Prabal. With ongoing Iran-US uncertainty, what would be the impact in Indian equity market if something goes wrong?
So, of course, there will be an impact, negative impact, is more of a knee-jerk reaction. We don't see any long-term impact because India is not a big trade partner with the Iran. We do have some assets there like Chabar port, but I don't think US will not ऐसा नहीं बोलेगा आप उसको use नहीं कर सकते. There will be some way out. So impact, there will be knee-jerk reaction, negative, but overall impact I don't think it's people are going to even discuss about it. No one talks about Venezuela now. People don't know what happened to Maduro. Am I right? Has anyone even tried to figure out what happened to him? No one talks about Greenland. Something similar will happen with Iran, USA if something happens there. I don't think India has any big stake there.
Okay.
Last question.
This question, yeah. Do you think the reaction on stock exchange on day of budget was justified in terms of market crash? Or was that a usual game of big sharks or punters to scare the small retail investors?
Sir, I will not be able to comment on what is the mindset of the big shark and punters. But you all know I came in front of you on 1st Feb, on Sunday, and I told you this is overreaction is not justified. And I did say that market Monday ko 3:30 ko dekh lena. And that's what exactly has happened. So it was definitely an overreaction. And that's why I keep saying, in market, if you wish to make money, control over emotions. There are people in the market to manipulate your emotions. I must tell you very frankly, there are vested interests in the market who will exploit your emotions. Don't fall prey to them. You need to look at the fundamental side of the story. मुझे बताओ बजट में नेगेटिव क्या था और वो था तो फिर मार्केट अभी इसकी बात क्यों नहीं कर रहा है था तो होना चाहिए ना. It should reflect, except STT which is more for the FNO market, which only 1 crore unique investors trade in the market. वो 1 crore भी नहीं है. You know that how many retail investors trade in the FNO market? Any idea, anyone? I'll give you some data, okay? And I did some presentation. मेरा स्क्रीन मत दिखाना अभी बिकॉज मैं कुछ सर्च कर रहा हूँ तो हाँ ना तो इसको आदत है बसीर को दिखा देता है. तो एक सेकंड मैं आपको बताऊँ. आई गिव यू सम डेटा तो यू विल सरप्राइज टू नो दैट यू नो हाउ मेनी व्हाट वी कॉल ओनली एंड दिस इज एक्टिव इन्वेस्टर्स आई एम टॉकिंग अबाउट. इट्स लेस देन 1 crore. ओके तो आई गिव यू सम डेटा. नॉट विजिबल ना. 1 minute. Total 20 lakh investors, unique investors trade in only derivatives market. And there are only 65 lakhs investors who trade in derivatives and cash market. How many unique investors we have in the country? Near about 12 crore. So you can understand what percentage of investors will get impacted because of STT hike. It was a knee-jerk reaction. So I think that's it. Am I right? So I don't. There will be more questions, but in the interest of the time, we need to conclude here. Good night. Take care. I think Mohit is there in front of you tomorrow. Thursday, I'm in front of our PMS customer with some more interesting data points. So those PMS customers, please do join me on Thursday at 7 p.m. Good night. Take care. See you again next week for others.
Yeah, just a minor update that tomorrow we will be having the latest editions event. We will be having the result event. It's been rescheduled and shortly we will be informing all investors as well. Thank you so much.